Now that I have shared with you some tips and tricks of using Price Master Pro, let us put it all together. For this purpose, I will use one of the strategies that I use on regular basis, called no-name trading system. As the name implies, I didn't have a fancy name for the strategy, so I simply didn't give it a name. This strategy is a simple trend-following system that looks for moving average rebound setups. In particular, we look for 3 setups: fast retracement, slow retracement, and fresh crosses. The strategy uses Price Master Pro, trigger lines, zero lag MACD, and cycle indicator. I will not go into the details of the strategy, but I encourage you to review it at various online Forex forums, such as ForexTSD or FX Fisherman. For this strategy, I follow a stepwise process for taking a trade. The first step in the process is to determine market condition. In this step, I attempt to determine the various trends on different time frames. Is the market trending? Or is the market sideways? Once I determine the market condition, I then determine where price is in comparison to Price Master Pro levels. Is price above, below, or at a level? Then I look for tradable setups, and I compare the setup to Price Master Pro levels. Does the setup give me good targets, with good reward to risk ratio or not? If the setup is of weak reward to risk ratio, I pass on it. If not, I move forward and determine the position size I want to risk, and then I take the trade. In this slide, I apply what I discussed in the previous slide. As you can see, I have 3 time frames open on the euro-dollar. At the top right corner I have the daily chart open. At the bottom right corner, the 4-hour chart, and at the left, the 1-hour chart. I use the daily chart to determine long-term trend, the 4-hour chart to determine intermediate trend and potential setups, and the 1-hour for entry, as well as potential setups. In this example, reviewing the daily chart, we can determine that price had bounced off support and ended the month with a flat trend. Trigger lines are coming close together, signifying weakness in the uptrend. We further determine that price is at resistance. This tells us that we should be looking for short entries only. Moving over to the 4-hour chart, we see that the week had opened with a gap down, letting us know that price will potentially try to close that gap, and that we should wait for that to occur, then jump on board the trend going short. Price retraced back to the trigger lines on the 4-hour chart, providing us with an opportunity to go short. Zero lag MACD and cycle indicator are pointing up, letting us know that there is a potential divergence setting up. The 4-hour chart setup isn't ideal, so it does not tell us much. When that happens, we move to the 1-hour chart and look for potential setups. In the 1-hour chart, we notice that price opens the day with breakout below support. The color of the support line changes from blue to red. Trigger lines, zero lag MACD, and cycle indicator curving downwards, telling us that a reversal is setting up. This can potentially be a fresh cross trade, except I prefer for the zero lag MACD and for the cycle indicator to align on the curve to make it more powerful. So, we will wait for confirmation and trade any pullbacks that occur. Several bars later, our patience pays off with a nice pullback to the trigger lines. This gives us the setup we are looking for, which is slow retracement. Now we move to the next step of determining price targets, in order to determine reward to risk ratio. I have identified such ratio using the red and green boxes for easy visual reference. Both boxes start at the entry price and end at the targets. The red box ends at the stop-loss limit, which is the nearest resistance level, and the green box ends at the nearest support level. By analyzing the size of the boxes, we can say with confidence that the reward is well worth the risk. Next, we determine our position size and take the trade. In this particular case, assuming our account size is $10,000, our position size would be 1.4 lots. It is important to point out in this case that once we take a trade, we constantly have to evaluate market condition to determine whether the market had moved against our initial assessment, or we are experiencing a temporary retracement. At the time of taking this trade, price had retraced all the way back to our entry price. Nevertheless, since the conditions that made us enter the trades never changed, in other words, all indicators were still in support of a short trade, we maintained our position and never exited. This exercise paid off, and as a result, the trade was successful, and we booked 48 pips profit, while only risking 14 pips.